Switching gears to mining, and so by far the number one question I'm getting from the network at the moment, and institutionally it's been a pretty hot topic as well, is how much ammo do Rio and BHP actually have for special dividends and or buybacks? So I've got two charts here, the top one for Rio, the bottom one for BHP, that looks at EPS, earnings per share, dividend per share, and cash earnings or operating cash flow per share as well for both miners over the last 5 years. And really the dark blue line is the dividend per share. And what you really see is how comfortably both are covering their current really high dividend profile. The scale of the chart really sort of masks how strong that dividend profile for both of them is. When you go back to FY 2015, just look at how tiny that little blue bar was for dividend. That was equivalent to roughly 2 to 3% yields for both, and that was really trough earnings at the bottom of several of their major markets. So since then, obviously, markets have recovered, but especially iron ore. So iron ore surging has been really meaningful for both, but especially Rio, given, as I commented the other morning, that it's now 80% of earnings, EBITDA, is coming from iron ore, just on that price strength we're seeing there. Where for BHP, it's surged from 2 years ago, it's 45% of EBITDA. Now it's around 60%. So that price strength is really bolstering earnings, especially for Rio. Now, in terms of what I'm actually expecting from this earnings season, for Rio, I'm expecting all of it to come in the way of cash dividends. So they've got Chinalco, a large Chinese company, on their share register that is already at its limit allowed by FIRB or the Australian government. So they cannot have their interest in Rio increase from its current stake. So any buybacks would by equivalent increase their percentage holding as it shrinks the rest of the shareholding base. So they're basically at their limit, and it's up to Chinalco if they want to change their holding or not. So Rio have no control over what happens there with Chinalco and the government. But basically, and they could try and force their hand, but obviously by doing a buyback, but they wouldn't want to try and put that sort of pressure on their largest shareholder. So basically, it's all coming in cash dividends for Rio. They have been the major beneficiary from that big surge in iron ore, given their huge percentage of earnings from it. So for this earnings result, at least, expecting another bumper dividend. BHP, less so, but you could see it's sort of a different scenario for BHP, where they've got a huge multi-billion-dollar franking credit balance that they may look to try and utilise to benefit their shareholders. So it might be in the form of an off-market buyback as well as a special dividend. When you look at the chart, that operating cash flow line, the faint grey line on the very far right, especially Rio's is very strong in what I'm expecting, but both big miners, they could actually pay up to that level, just given the extreme balance sheet capacity they've got at the moment and very low capex requirements. So very hard to pinpoint where exactly the numbers will fall, but for Rio, I'm expecting a big special cash dividend, and for BHP, potentially a special dividend and a buyback.